welcome back to Money Planet. This video is about Wall Street legend, Peter Lynch. For 13 years, he was a fund manager at Fidelity Investments' Magellan Fund, where he achieved an average return of 29% and is regarded as a Wall Street legend. Let us now talk about the investing philosophy that the legend has mentioned in several interviews. Before we begin, please hit the subscribe button if you want to see more videos like this.
But if you do some work, do some research, know what you own, look at the research, look at the balance sheet. If you could add 8 and 8, get fairly close to 16, you can find out this company has lots of debt, no cash, they're in trouble. People carefully buy a refrigerator, carefully take a vacation, and they'll put $5,000, $10,000 some stock to hear on the bus or to party. That's dangerous.
Peter Lynch has said similar things in other interviews. He said in another interview with Charlie Rose, "If you're gonna buy a stock, you should do certain things. If you're not willing to do these things, you should leave your money in the bank." These words can be summarized as follows. Buy what you know. Indeed, his wife purchased a product and used it so well, that he decided to research the company and invest. Or he stayed at a hotel and decided to invest because the service was good and the price was low. This is a typical anecdote demonstrating his investment philosophy.
I mean, companies are dynamic. Behind every stock, there's a company. These are not lottery tickets.
He lamented that people don't realize that a company's performance over the last few years is completely correlated with its stock price. And he also lamented that people were more concerned with this than with the company's performance. Too much money supplies are commodity prices. This is not to say that a company's performance is solely to blame for its share price. Even if the company performs well, if we enter a recession, the stock price may fall. However, forecasting things like a recession or interest rates is insane and impossible, so don't be concerned. In fact, many economists' forecasts are incorrect. Even the Federal Reserve Chairman can influence interest rates, but not predict them. So, what should we do? We should focus more on the company behind the stock. Are the company's products of high quality? Is there always business at the company? Is the company working hard to meet its objectives? From such simple and visible things to balance sheet, you can predict that a stock will rise using information that is readily available. Now, let me tell you about an anecdote he shared.
And I said, if you made it through 5th grade math, you can do it in the stock market.
A teacher heard him say this and started teaching the students. Students analyzed their balance sheet and chose stocks to invest in. Surprisingly, the stocks they chose increased by 69% in just 2 years. For comparison, the market growth rate that year was 20%. He claims that the point of this anecdote is that even a 7th grader did it. Rather, I think it was possible because the students had no knowledge about other issues. As Peter Lynch stated, those students would not have considered the country's foreign relations or trade policies outside of the companies they were familiar with. That's it. That's the one piece of advice for investors.
If you don't understand a company, if you can't explain it to a 10-year-old in 2 minutes or less,
Yes.
don't own it.
The inflation rate was extremely high, and there was a significant increase in interest rates during the year 2022. If you want to learn more about the relationship between inflation and interest rate hikes, please click the link in the upper right corner, watch the video. As a result, people are becoming concerned about a recession in 2023, recalling the situation in the 1980s, which was similar to the current situation. Even in such circumstances, Peter Lynch is a legend who has achieved massive returns through mutual funds. He believes that the global economy will eventually recover, and that all we need to do is avoid bad times and look for companies that are doing well. If you enjoyed this video, please like it and subscribe to this channel for more videos like it in the future. Also, make sure you have the bell notification turned on so you don't miss any of our videos. See you in the following video. Thanks for watching.
we've had 8 recessions since World War II. We've got out of every one of them. This is number 9. There's nothing unique about the system. We'll get out of this one.